Hi everyone, welcome back to Beerage Podcast. It's Saturday morning. Yes, if you noticed, I'm wearing the same t-shirt as I was wearing yesterday. That was because we have an event happening for the office this weekend, so I had to kind of compress and get these out to you guys. So it is pre-recorded, so you don't have to wonder how come it's been 24 hours and Aman hasn't even bothered changing his t-shirt. I have, but you won't be seeing it because I was recorded this earlier. Anyway, that being said, today I want to talk about something. We all talk about these unicorns and how these guys get funding and how they're doing wonderful. So I thought we'd talk about how it can turn sour very fast. And even in private equity, there is no clarity, and how private equity also they lose money, and how as investors we can get fooled. We read about Anil Ambani and we read about people losing money in Kingfisher and Jet Airways. Even private investors, PE, can lose money and lose it big time. And it's not as easy as you think, even for them, when they have so much of information access to them, and they know the guys who are running the company, and they know the banks, they know everything. Things can turn sideways very fast. And to talk about that, I thought we'll hit on this news item, which is about a cloud kitchen firm called Big Spoon. It's facing legal action from Grip Invest over non-payment of rental due. This is what was out in the media. It's nothing which I have researched or anything. It was in the news. So I thought talk about this article and what's happened with Big Spoon and its co-founder, CEO couple, Mantrani, and then we'll see what happens. Grip Invest is the company which has made several allegations against Big Spoon and its co-founder, CEO couple, Mantrani, and the series of events has finally percolated into legal action being taken. So, what is the background? The background is Grip Invest and Big Spoon. Grip Invest is an asset financing company that had entered into an agreement with Big Spoon in March 2021 to lease kitchen equipment and other assets. This decision was based on Big Spoon's financials and experience of its co-founder, Kapil Mantrani and Pooja Thakur, and Big Spoon's financials for the year 2022. Big Spoon reported significant net loss increased of 168% to a tune of 15.02 crores compared to the previous year, where the revenue standard was standing at 17 crores. The company attributed the net loss to the high rental and promotional costs aimed at enhancing its market footprint to boost revenue. These are the accusations. There are accusations that Big Spoon led stakeholders and manipulated financial numbers, including bank documents, which led up to the funding transaction. Multiple opportunities fell through for them between May 2022 to June 2023, partly due to the funding slowdown, the winter freeze, as we've been talking about. And what is the thing between the announcement and the reality? Well, Big Spoon had announced with much fanfare that it raised 100 crores in August in 2022 from investors like Indian Angel Network, NB Ventures, and Let's Venture. However, these commitments did not materialize into actual funding, and it turned out the company was exaggerating these numbers well beyond what they actually were at, what they were committed to. And the company was undergoing a transition from a company-owned model to a franchising model, meaning instead of operating each of its outlets by itself, it was trying to sell franchisee. Under this new model, Big Spoon retained control over the menu, strategy, and marketing, while the franchisees manage recurring expenses such as staff salaries, vendor payments. We know what a franchising model is. Mantrani attributed Big Spoon's challenges to working capital issues and mentioned ongoing discussions with existing investors to secure additional funding. Then, by operating 61 outlets across 20 cities, is what they were doing in the company's financial statements for that year. Grip Investment are expected to receive rental payment from Big Spoon, an Ahmedabad-based cloud kitchen startup, in September 2023. September 2023. However, the payments were not made as per the schedule which was agreed upon. Despite stationing a team at Big Spoon's office, Grip Investment alleged they could not reach Kapil Mantrani. They also stated neither the senior management team was available or they couldn't get in touch with the co-founder, Pujan Thakur, nor the investors or the creditors were able to contact them. This led to Grip Investment announcing initiating legal action against Big Spoon and its leadership, and their failure to pay rent for the kitchen equipment and other assets taken. Meanwhile, his response couples response has been to the allegations, claiming that investors had been threatening him and his family for a month after resorting to physical intimidation, risks to his family, and death threats. That's why he's disappeared. And Pujan Tankar's involvement, Mantrani also claims that his co-founder Tucker distanced himself from the company during the challenging times and did not communicate with the stakeholders. What is the response? A spokesperson for Big Spoon Foods refuted Mantrani's claims and mentioned that Mantrani's unethical conduct across the companies are being investigated. So now the company is investigating the promoter, and it's turning into a circus of sorts where legal actions been put forward by Grip Investments and civil actions being taken over the owners for the rental dues which are due. So this is the basic outline of what's happened with Big Spoon. And there's another piece of information which is also interesting, which I wanted to share with you. So what is the main crux of it is Mantrani is facing allegations of misleading stakeholders. The companies claim to have secured this 100 crores, $12 million through a Series A round in August 22, and actually none of that was done. So all this came to light when investors blogged about the same, and the CEO admitted finally, saying he had not received even a fraction uh, of the claimed amount, but denied spreading uh, false information. Despite facing all these capital issues, the company claimed to have shown growth in several key metrics, which is all seems to have finally been cooked. The books have seemed to be cooked, and the valuation fell through, and all of this came to finally everything crumbling, and Big Spoon now finally literally coming down and shutting doors. So what was the point of this was I wanted to highlight to you that even someone who has complete access to a company's financials knows the owner, knows the founder, knows the guy who's starting the company. Being an investor is a crazy risk which you have to take. Private equity investor, some of the challenges you can face can be explained through a startup or businesses like Big Spoon. So, what are the challenges that a PE can face is something we all know, which is a misrepresentation of financials. As in the case we have seen with Big Spoon, startups may misrepresent their financial health, inflating numbers, hiding abilities, leading to misguided investment decisions. Then they could find operation challenges. A startup might have underlying operation issues such as supply chain problems that aren't immediately evident, which the PE cannot see. These issues can hamper growth and erode invested capital. Governance issues, corporate governance issues, such as lacking transparency, poor decision making, or ethical concerns, can also jeopardize the company's reputation and operations, and subsequently affect what the private equity is invested in. And another problem which you can see in this is also due diligence and limitations of that. Despite going through all due diligence and going through all the books, certain red flags might be overlooked, especially if the company has intentionally hidden these issues, which seems to have been happening here. And verifying all these data can be very challenging, especially when you're making an investment. Then the negative press, such as allegations against Big Spoon, can significantly impact consumers' trust and overall brand image. This can lead to declining in sales and business performance. So, whatever, if Big Spoon is trying to distance itself from Big Spoon is trying to distance itself from the CEO and other co-founders, saying that we're investigating, there seems to have been malpractice. The damages to the brand is already done. And another thing is overvaluation. Over time, the investments can limit the upside potential and increase downside risk for a private equity investor. The companies facing working capital issues can also hinder day-to-day operations, jeopardizing the investment the PE firm has made in this company. And also dependency on key personnel. Startups are very heavily rely on their founders and key team members, and any changes in this core team can impact the business and the business trajectory also. While startups might show initial promise and might face challenges when scaling up, either due to operational and financial market constraints. These things can turn sour very fast. And of course, there are also legal issues such as the lawsuits, which are going to be now rolling from Big Spoon on the CEO on Big Spoon, and Grip Investment. All of this is negative news and also starts eroding the value for the PE who's made the investment. This all leads to exit strategy concerns. As an investor, if you're looking for some kind of an exit or a sale or going for an IPO or another form of liquidity event, all this kind of dwindles very fast, and there's no way for you to get out of this. So these are the kind of challenges private equity investor has to deal with while investing in all these unicorns and startups. And all these, we read about the good ones, which all went very good. We know about the Amazon, we know about Flipkart, and we know about all the successful PE stories, which have all gone to IPO. And now ARM is in the process of going through its IPO in US. It's not a startup, but what I'm trying to say is it was taken private and now it's being released again. So there's an exit strategy for the guy and he's making money. For every one which succeeds, there's one of these unicorns turns successful. There are hundreds of them which go belly up very fast. So it's the same situation, or even worse, in the private equity sector. Though in the media, it's always played up that these private equity sectors are carving out huge chunks of potentially great companies and not allowing them to come public, and having first go at these companies in terms of profit and revenue, while the investors have to wait for the IPO, and we don't have a choice but to wait because we don't have that kind of money to leverage. We must also do realize for every dollar a PE makes a bet, he loses quite a few dollars on the bad bets which he's made. So keep all this in mind. So next time when you read about PE investors and how private equity is doing so well and doing so great, they never talk about how badly things have gone in some of their investments. I hope you had this video informative and entertaining as always. And I hope you have a wonderful weekend and a wonderful Saturday. And I'll see you guys on the next one tomorrow. Thanks.